this is Kathy Pfeffer-Hahn. How do we save money when insurance rates are so high? Well, here are 9 ideas that might help you. Stick around to the end and see if you can answer these 3 questions and save yourself hundreds or more each year. Car insurance is a crucial financial safeguard for individuals who own or operate motor vehicles. Its primary purpose is to provide protection in the event of unexpected accidents or incidents on the road. Without car insurance, individuals would be personally responsible for covering the costs of any damage, injury, or liability resulting from accidents that they might be involved in. Car accidents can lead to significant financial burdens, including medical expenses, vehicle repairs, legal fees, and compensation to other parties involved. Car insurance offers a safety net, ensuring that financial responsibilities are not shouldered entirely by the driver, and that reduces the potential for financial ruin. But beyond the financial protection, car insurance is often legally required in most states. Laws mandate a minimum level of coverage to ensure that drivers can meet their financial obligations if they have an accident. Car insurance, therefore, is a vital component of responsible vehicle ownership because it not only offers financial security, but also helps maintain the safety and integrity of the roadways for all of us. The history of car insurance, it's a fascinating journey that's evolved over time to meet the changing needs of our society. How can you save money on your insurance bill? Consumer Reports recommends these ideas. Increase your deductible. A deductible is what you pay before the insurance kicks in. If you have a $1,000 accident bill and your deductible is $200, then you're going to pay the first $200 and insurance will pay the remaining $800. If you choose to pay a larger deductible, you can lower your insurance rates. By increasing your out-of-pocket deductible, you'll have to pay for the repairs from $800 to $1,000. If you increase your deductible to, say, $1,000, you can reduce your annual premiums for about 20 to 25%. Since the average driver does not file a claim more than about every 10 years, you'll probably not need to pay these higher deductibles anyway. As your car ages, you should consider dropping your collision and your comprehensive insurance. Collision is going to cover you if you're involved in an accident, while comprehensive covers the acts of nature, like storm damage, vandalism, fire, and theft. As the value of your car comes down, it might not justify having these coverages. The rule of thumb seems to be that when the premium you pay is 10% of the car's value, you might want to drop collision and maybe even comprehensive. But keep in mind that you might want to keep the glass repair coverage because it's not uncommon for your windshield to need repair. You can also take a defensive driving course that can help you lower your premiums as well. These courses can vary in cost and length of time, but you might be able to save 10% annually on the cost of your insurance. Many of us don't drive as much as we used to before COVID, so working from home has made it easier for many people to be able to drive less than 10,000 miles a year. And since you won't be on the road as much, you can save on your insurance bill as well. You may need to report your odometer reading on a regular basis, but it could be worth $100 in savings a year. Not surprisingly, if you combine both your home and auto on the same vendor, you're probably going to be able to save around $300 a year also. And they're going to do this to entice you to spend your money with them. So by having both policies, they'll lower the cost of the policies. It's not always the case, but it is worth investigating while inquiring about your car's insurance savings. If you were to run into a pole or a tree branch or scrape your car on something, it's probably best if you don't report it and just pay out of pocket and have the repair done yourself. Claims to your insurance company will most likely cause your rates to increase. You're going to need to weigh the cost of the repair compared to the multi-year rate increases. This does not apply to accidents with other cars resulting in property damage, and most states require you to file an accident report if there are injuries or death with the police. But depending on your driving record, you could save up to $300 a year on your premiums. There are people who sell insurance from many different companies. This independent insurance agent can help you compare insurance coverage and premiums for many different insurance companies. They may also offer insurance from companies that you hadn't thought of or weren't aware that offered insurance. They can also streamline your search for the best rates. Another option is getting what's called a dividend policy. This unique way will allow you, as the insured, to actually make money as you pay money towards your policy, because the policy is actually an investment and it's going to give you money back on that investment. So instead of a traditional insurance policy, you buy a dividend policy. In this way, you get money back, like an investment, which can be anywhere from, say, 5 to 20% based on the market. I mean, if you're going to be giving money away to the insurance company, because you do hope you never need your insurance, in premium fees, doesn't getting a dividend sound good? These policies could have a higher premium, but it is worth a look. Another option can be to have your insurance company track your driving habits. By either using an app or a plug-in device, you're sending information to your insurance carrier. Once they know you're a safe driver, they start to lower your premium. Of course, the downside is that you're giving up some of your privacy, and you might have your rates increase based on that data as well. Insurance might seem like a waste of money to some people, but even if you're a great driver, you never know what the other drivers are going to do. So ask yourself, can I really afford to pay for a new car or someone else's vehicle in an accident? Now, consider if you can pay all of the medical bills as well, because most of us can't. See if you can answer these 3 questions. What's the name of the policy that actually pays you money back? Does working from home save you in car insurance costs? And should you report all accidents? Feel free to share your answers in the comments below. This is Kathy. Thanks for watching my channel. Please hit like, subscribe, and the announcements button so you know when new episodes come out.